The world's biggest asset manager, that would be BlackRock, is gearing up for their own Bitcoin ETF, reportedly using Coinbase for custody and pricing, according to a person familiar with the matter. It's honestly a really interesting time to make the move and raises a couple of questions, not least of which is, if this is a futures-based vehicle, the only kind that's been approved in the US to date, why would Coinbase custody be involved? And on the other hand, if Coinbase custody is involved, what does BlackRock know that would push them towards an approach that's been uniformly and repeatedly rejected by the regulator to date? Jen, what do you think?
I had the same questions as I was reading the story, and it feels like another road to boring story, right? Despite all of the regulatory action that's happening, despite what we see going on in the markets and tokens reacting, we still have the largest asset manager in the world filing for an ETF. Granted, we don't know if it is a spot or futures ETF. I guess my question to you, Adam, is what is the likelihood that this could be a spot ETF? And what do you think about the timing? It feels like odd timing, I must say.
Yeah, I mean, we're in definitely the depths of a bear market right now, and ETF vehicles, especially on the future side of the table, really haven't performed very well. One of the downsides about future contracts is that effectively when markets are going down, then you have kind of the losses get amplified, right? When they're going up, it's kind of the other way. And one of the things about it also is that it doesn't affect the kind of price of the underlying asset, because none of the actual, effectively what you're doing with that type of ETF is you're buying futures contracts to bet on the price appreciation of Bitcoin or not, depending on the type of vehicle. So that means that if you have $1 billion worth of ETF demand that goes into an ETF, it doesn't actually change the supply demand dynamics of the underlying asset at all. And that's one of the reasons why kind of the futures approach has been interesting, is because the reason why the SEC has said that they prefer futures is that they're concerned that the underlying assets and the exchanges potentially could be manipulated. That's a funny argument, because if you have futures on something, you're betting on the price of something, and that would mean that futures would definitely be kind of subject to any distortions that were there in the underlying asset. But I think it does come back to that other question. Now, it's inevitable that this is going to happen. This has always been a stalling action from the SEC. And I think that's the interesting question is, does BlackRock know something that we don't that would push them towards making this push now when the market really doesn't seem to support it? And yet, here we are. Zach?
I'd say it might be a bit, they might have a bit of foresight here, right? They're going to say, hey, Bitcoin's going to come back. We want to be first in the market with something that could be of use to our clients. They're a longtime partner with Coinbase. So I think if this reported connection is true, that would make sense, right? They announced a partnership with Coinbase, I guess back in the summer of 2022. So the fact that they would work through Coinbase here, maybe it just is a continuation of what they had set in motion a while back, right? It may not be something especially new, but it may be a way that gets a product into the hands of BlackRock customers in a way that's more comfortable to them. The spot Bitcoin ETF was this long sort of holy grail of the industry, and is still very much in question as whether or not that will ever see the light of day. So one would think that maybe this would be the futures approach, since that has worked, but who knows? Again, this is according to a source. This is a scoop. This has not yet been announced by either of these teams. So this is all reportedly at present, and things are often subject to change. It is fascinating, I think, to see movement on the Bitcoin ETF side in the wake of what we saw with GBTC, the Grayscale Bitcoin Trust disclosure. Grayscale is a sister company of CoinDesk, all that good stuff. But the GBTC trade really wrecked a lot of people in the last cycle. And I think having a Bitcoin ETF in the market might be a more safe path going forward for a lot of these more traditional financial firms who want access to Bitcoin without necessarily going whole hog into the asset itself. So the fact that BlackRock is behind this is potentially really large, and potentially suggests that, again, TradFi players, big ones, are still interested in Bitcoin as an asset and getting the products onto the market that they think will be useful to them come next interest cycle, come next bull cycle. So it's gonna be interesting to see if this hits the market before then. Adam, I think I saw your hand. I'll toss it back to you.
Yeah, I mean, I think that, again, you can look at what kind of is going on with the U.S. central bank, where yesterday we had kind of the first pause after a really record run, of rate increases, up 2,000% in just over a year in terms of the core rate, from 0.25 up to 5.25 is kind of the upper bound of that range. So, I mean, you've got weird dynamics in markets right now, and those weird dynamics in markets are pushing people into areas that are typically not in their kind of comfort zone, because, again, one of the things about monetary policy in this fashion is there's no place to hide. It's not like there are safe assets. It's not like you can look to another currency And it's not like you can even look to something like Bitcoin. And again, like the difference between the spot ETF and the futures ETF is, I think, really interesting in that spot ETFs are better vehicles in many ways. Other countries have approved them and they haven't seemed to have had a problem with them. And the US has been a notable outlier in that, kind of forcing people down the futures paths, even as it has delivered worse results for investors. So, that's really where I come down to is just like, it's an odd move from the regulator. It feels like it's more of a stall tactic than it is really anything else. And if that's true, again, and if some of my cynicism about the regulators and the revolving door that operates between them, then, this seems like kind of prime ground for, hey, we're going to improve one from a trusted source that just happens to be the largest asset manager in the world, who we have very close proximity to from a power perspective. So that's the cynic in me. But what do you think, Zach?
I mean, I will leave your cynical take with you and I will move on, but that's some good stuff. A lot of good, interesting things here. TradFi still interested in the crypto world. Pretty crazy.